So I was just looking at Bitmine BMNR's price today. It's trading at 45.60 as of September the 10th. And then I jump back onto our spreadsheet and take a look at where we are today in terms of ETH trading at 4,300. They're holding about 2 million units. I know he bought a little bit more, but I'm going to keep it to the PR that was released earlier. With an ETH holding of $8.9 billion, some cash on hand in BTC, and then the outstanding shares, they didn't release in their most recent PR, but I estimated between roughly 249, 250 million based on the volume that was traded, giving you a NAV of almost $37. And right now, in terms of the market price, trading at $45.60, giving you a 1.24. When I look at all of this going forward, I think to myself, how can BMNR increase its NAV per share without continuing to dilute its shareholders? Because if we look at the equation that makes up the value of BMNR, we see that the NAV per share is made up of the ETH price, your ETH holding, which gives you your NAV. And then the only way to increase this NAV per share is really looking at how can we increase our ETH count without really seriously diluting our shareholders. And as most of you who've been following BMNR will know that the ATMs eventually run their clock. They do not work anymore because as you continue to do ATMs, you're going to strip away a lot of the value from your shareholders as you dilute them. So in today's video, what we're going to do is we're going to cover different mechanisms in terms of what are the next steps forward for BMNR and how can they continue to increase that NAV per share without diluting their shareholders. So I thought it'd be the perfect time to cover BMNR today and do an update video. So in today's video, we have a lot to go through. I'm going to first go through their holdings and their value. Next, I'm going to give you an update from Tom's most recent video. I know some of you have watched it, but there's a lot of different viewers and everybody's from a different background. I'll highlight the critical and important things. Next is we'll move to what's the next move for BMNR. How can they increase that NAV, that asset value per share, so that this way they're not diluting shareholders and increasing value for all that's involved in BMNR. Lastly, we're going to look at ETH and their fundamentals and why I remain so bullish on BMNR and then also ETH as well. Welcome for those of you who are new. My name is Colin. What I do is I do fundamental analysis, looking at projects, crypto project stocks that I believe hold long-term value. Now, before we get started, remember that none of this is financial or investment advice. The market is extremely volatile and very risky, as you could see. Whether it's crypto or stocks, you can lose all of your capital. So make sure you do your own due diligence and really hardcore research before you get into anything. Lastly, I have nothing to sell you. I don't have any trading groups, Telegram, Discord, or anything else. I'm not sponsored by BMNR or anybody that I mentioned in this video. And finally, I have a position in BMNR. Those of you who follow me will know this, and also a pretty sizable position in ETH. Now, I do ask that if you enjoy this content, if you can give this video a like and consider subscribing. And finally, I am on X, so for those of you who are on X who'd like to follow me, I can tweet out this information a lot faster than I can make a video. So with that out of the way, let's get started. It's hard to imagine, but time flies by. It's only been since July, early July, so about 3 months since Tom has started on this quest of acquiring 5% ETH. Now, if you look at their most recent holdings in terms of their public disclosure, they have roughly 2 million ETH, slightly a little bit more. 9 billion in terms of their treasury, that's the ETH plus cash. They have about 266 million in cash, a little bit of BTC, 192 that they haven't sold off yet. And then finally, in terms of the rate of acquisition, they purchased roughly 34,000 ETH per day, considering their last public disclosure. So that's a tremendous rate of purchasing ETH every day. And you can see this right here, these announcements, Tom putting it on his page and BMNR's page. And then also, if you look into their most recent PR, that's exactly what they've disclosed. I know they purchased a little bit more ETH this week, but we're going to leave that out in terms of making the calculations a little bit more clean. The other really impressive thing is how fast BMNR and Tom has been able to grow their treasury. If you look right over here, Strategy took roughly 1,200 days to get to 9 billion, whereas BMNR only took less than 90 days, okay? In 3 months' time, they've already reached where Strategy is within that 1,200 days. So just jumping over to our spreadsheet, you can see right over here, BMNR holds about 2,069,000 ETH at a price of roughly 4,300. This changes based on what ETH is trading at. It was trading at 4,400, closer to 4,500 earlier. That gives you an ETH holding of 8.9 billion. You have 266 million of cash on hand. This is the amount of BTC that's worth. It's only 21 million. So some people calculated, they take that out of the calculations. No big deal. It's a small amount. So that's their NAV right now in terms of their shares that are outstanding. They didn't report that, but if you estimate it based on the volume of ETH that's been traded, that's what you'll come up roughly 249, 250 million. So I'm just going to leave it as a flat number. giving you a NAV value of close to $37 in terms of what they're trading on the market today, $45.60. That gives you an MNAV of roughly 1.2. So as you can see, the MNAV has slowly contracted. And we just come right over here. We can see their rate of growth from July 27th, 43 days later. You're talking about a 300% growth in acquiring ETH. And I always find it really amusing. A lot of people come at me and, Tom and other BMNR supporters, and they say management is doing nothing or Tom is scamming us, BMNR is scamming us. Well, if you look at the data, okay, I'm just reporting the data, so don't kill the messenger. They've gone from $22, $23 of NAV per share, and in 43 days have grown that to about $37 per share. Now, of course, some people buy in at a higher or lower price. Management has no control over what people's decisions are in terms of when they buy or sell, okay? But looking at the data right over here, they've really been able to grow their treasury. They're still adding about $150 million a day if you break it down in those 43 days. And that's what I said. They're adding roughly 34,000 ETH per day. So that's a rapid rate of growth. And if you just left it every day in those last 43 days, you could see that Tom's growing that NAV per share by about 33 cents every single day. And finally, I'll just come back to this page right over here, our model earlier. These are the exact numbers of what it's worth today. You could see the MNAV is trading at roughly 1.2. Now, recall that this MNAV right over here, it actually changes, right? Sometime during exuberant buying time when the market is really bullish, it can go well above 2.5. In Metaplanet's case, it actually jumped up to 6 to 7 at one point. And you could see with companies like Zilla, it could really skyrocket, especially at the beginning. Even MicroStrategy, who's now trading below that MNAV of what they used to have, sometimes they traded well above 2. And then there were other times during the bear market where it's harder to raise capital, they were trading actually below 1. So even MicroStrategy traded below 1 at some point. But here's the goal today is that, yes, the NAV per share, that's based on your ETH and ETH units, right? That makes up your NAV. But really, we have to look at ways in terms of understanding how we can grow this NAV per share without diluting shareholders. Because if we keep on doing the ATMs, which as you could see at some point, you just exhaust that ATM when you continuously sell into the market because this number is going to balloon, right? That way, that NAV per share cannot be grown. So what are the next steps for BMNR? That's what I want to answer today, looking at the fundamentals. So the other really interesting thing that happened this week was about a day ago, Tom announced and BMNR announced that they've invested into Octo. So for those of you who don't know, they actually got into the strategic investor rounds or those pipe rounds. They got in $20 million at $1.46. So it's roughly 13 million shares that they got, 13.7. Octo is just basically a treasury company, but a very interesting one because they're not holding BTC, they're not holding ETH, they're actually holding World Coin. So the World Token, that's actually Sam Altman's company. The World Coin, we don't have enough time to discuss it today, but it's basically proof of human. With this increasing AI world, you start to see a lot of different AI technology that's coming out. You could see that they put that announcement on there earlier, and also the World Coin skyrocket and Octo stock that day went nuclear. This is not their stock right over here, but this is a meme coin stock, right? That day, Octo behaved like this because it traded up at one point at $45. It was 3,000%. And then if you look at the height of the day, it actually traded closer to $79. So it really ripped up. I know the price has contracted just like everything else, just like SBET, BMNR. During those early runs, you get a lot of excitement and running that stock up a lot. So next, let's just go through the update of the chairman's update, Tom's message, and why ETH continues to have a lot of fundamentals. So for those of you who've seen this already, you could skip forward, but I'm just going to touch upon the most critical and important point, why I think Tom lays out his argument very clearly. So Tom calls this the Ethereum macro supercycle, and there's good fundamentals on why. First thing he talked about was that 1971 moment for the US dollar when it went fully synthetic. What happened was President Nixon took the US dollar off of the gold standard in terms of gold backing the US dollar, and it went fully synthetic. So gold became a store of value, whereas, the synthetic dollar created a lot of financial instruments on Wall Street. Some of the stuff that we know, like money markets, currency, debit cards, MBS, mortgage-backed securities, currency swaps, all the way to the S&P 500 index fund, zero coupon bonds, which we're going to talk about, and then CDOs, collateralized debt obligations, which are some of the financial instruments behind our mortgages, our bonds, our loans that you see out there today. And he made this really important comparison, saying that Ethereum is having that 1971 moment because real world assets, RWA, are being tokenized, meaning they are becoming synthetic. So all the legislation that we've been seeing, like the Genius Act, which makes its way for stablecoin. And then in terms of Project Crypto, the SEC is moving towards financializing everything onto the blockchain. It really gives it that 1971 moment that we're seeing right now in terms of Bitcoin becoming that store of value, just like physical gold, Bitcoin is digital gold, whereas Ethereum, that's where Wall Street is coming on. They're creating a market for digital assets. So that's the 1971 moment. And from there, we know that stable coins are pouring in. You'll see that data today. Tokenized equity, we're starting to see that tokenized credit, real estate at some point, and then intellectual property at another point. And then in terms of data collection, monetized royalties, all the way to verifying AI and proof of humanity, which we're starting to see in this ever increasing complex AI world that we're living in right now. And if we just take a look at the data, you can see that a lot of tokenized asset is ending up on Ethereum versus other chains like Stellar, Aptos, and Solana, and others. And he also reminded us in terms of the supply FUD that's always coming to Ethereum. You could see that the increasing supply, starting from EIP 150 all the way to 1559 after the merge, right now, in terms of the inflation, the supply and circulation, Ethereum is actually going at a lower rate than Bitcoin is. And then finally, he talked about the network value. You can see right over here, he talked about Ethereum trading in a base. If we look back at 2020 at its low to the high in 2021, you could see that was a 54x. Right now, we've been ranging in this price range for 3 years now. And then in terms of April of this year, when we hit our low, what would be the next move? Now, Tom says that he doesn't know what the next move is. I would be happy even if we did a 10x from today. And how he gets his value is first, he looks at the ETH to BTC ratio in terms of the price of ETH to the price of BTC. You could see that the 8-year average, he talked about it as being 0.047 or 48 right over here. And in terms of the all-time high in 2021, it actually touched 0.087. So this ETH to BTC ratio is slowly recovering right here. So even if we get to just the average, the 8-year average versus the all-time high, so this is where he talks about the price in terms of where he gets his value from. So here's the price of BTC. Tom is calling 250,000 in terms of this cycle, or even by Christmas, he's talking about it. He recently appeared on CNBC, talked about it going to 200,000. He says that if we get to the 8-year average, that 0.047 right over here, you get a price of about 12,000. And if you reclaim that all-time high, the 0.08, you get to 21,000. Now, I'm a lot more conservative than Thomas. I think that we're going to end up this cycle between 150 and 175. So that's why I keep on repeating, I keep on saying, even if we reclaim these values, we're going to be between sort of 8 and 10,000, 8 and 12,000, somewhere over there. Okay, so I'm a little bit more conservative than the price predictions that I'm seeing. The other thing that Tom talked about was all the payment rails. If we went through and we replaced those in the financial system, this is what he's saying, that ETH can go to 62,000 if we replaced all of it, and of course BTC around 250,000. Now for me, I'd like to stick in here. I think that ETH will probably tap out around 10, 12K. If I'm wrong, that'd be great in the right direction, of course. Hopefully we continue to thunder up. Now, everybody has a plan until they get punched in their face, right? That's Mike Tyson's famous phrase. Everybody has a motto, everybody has a prediction, but when you get out there into the real world, you can see that it looks very different, just like the HODL example. So now that we have an understanding of the balance sheet, the holdings, and the fundamentals that drives ETH, therefore driving BMNR, what is the next step? So just remind everybody right now, the only way of raising capital for BMNR is at ATMs. So they've announced that 24 billion earlier. Obviously, they haven't exhausted it. For those of you who are new, ATM is basically selling new shares into the market at the market price, raising money to buy that ETH. That's BMNR's business. Now, that works well in a bull market or when there's exuberant buying, when there's a lot of FOMO. What happens when the bear market or when sentiment is low? That ATM starts to contract, right? That MNAV starts to contract. So what happens is that you can't be depending on that ATM forever because you're going to continuously dilute shareholders, driving down that NAV per share as you increase the number of shares that are out there. So I think that it's a good mechanism to start, and you have to gradually graduate, okay? So gradually graduate in terms of your capital stack using different mechanisms so that you can buy more ETH, but increasing that ETH per share. As you can see with SBET and other companies, that MNAV is now below 1. Even with MicroStrategy during the bear market, not a lot of people look into this data, but at some point the MNAV was trading well below 1, even at 0.6, 0.7 at one point during the bear market. So you could see the strategy is not forever. So what do we do now? How can BMNR continue to aggressively purchase ETH at the rate that they're doing, so these are the next steps. They haven't announced it yet, but in my mind, I think this is what they need to do now, is to continue to execute that strategy, run that MicroStrategy playbook that Michael Saylor has already orange-pilled a lot of the world. So what does BMNR do? They need to acquire ETH in a different way that doesn't dilute their shareholders. And why not? These two guys are friends. And then Tom also talked about that he's going to execute Michael Saylor's playbook. So that's what we should expect to see next. So believe him when he says that he's going to execute the MSTR playbook. And right now, Bitmine does look like they are the MSTR of the Ethereum world. So how can we do this? If you listen to Michael Saylor's recent talks in terms of his podcasts or his recent Q2 earning calls, he really talks about these two mechanisms. Number one is preferred shares. Number two is convertible notes. These are the main capital stack and mechanisms that MSTR is employing right now to increase their NAV per share, their Bitcoin per share, their value per share. So let's take a look under the hood. Now, I know that there's other mechanisms, but these are the two main drivers of their stock, and see how we can employ that to BMNR. So first off, preferred stock or preferred shares, what they are hybrid securities. They sit between a debt and a common stock. The interesting thing about them is that it pays you a dividend. So that's the bond feature, kind of like a bond. But in all of MicroStrategy's preferreds, there are 4 different preferred products. It's ranging between 8 and 10%. It's also very high in terms of security, because should the company get liquidated, you're in front of the common shareholders in terms of your claims to the assets, but only behind the debt or the bondholders. And then finally, some of the preferreds also have a conversion factor where you can convert the preferred shares into the common stock, the common equity. So why should Tom and BMNR employ this strategy? Well, number one, they're non-dilutive upfront. That means you can bring in money, buy more ETH, increasing shareholder value without diluting your common shareholders. Next, if you listen to MicroStrategy and Saylor, he talks about this all the time. He really likes his perpetual preferred, and that's where MSTR is moving as well, because what he says about them is right here. The principal never matures. You basically boil that $1 billion forever because it's not a loan that has a maturity date, right? It's also paid out in dividends. This 10% is in dividends. It's not coupons like the way bonds work at. Because when you come into those crypto winter, management and the board has the option to suspend these dividends so that way they don't collapse when they have to pay these preferred dividends. And the last thing is he talks about it as being an intelligent leverage, right? It allows you to leverage your ratio a lot higher because you're not at that credit risk when a lot of these loans, these bonds, they come up to their maturity date and you have to actually pay them back. To give you an actual example out of MicroStrategy, I went into their Q2 earnings right over here. You could see that their Bitcoin holding, it's grown above this. Right now, their market cap's well over $100 billion. But I want to focus on here, all of their 4 preferreds, right? Strife, Strike, Stride, and Stretch. So we're going to take a look at these mechanisms and see how they're employing their preferred to grow that NAV per share from MicroStrategy holders. So here's a breakdown of MicroStrategy's debt and preferred equities, their preferred shares. As you can see right over here, the 4 of them total to $6.3 billion. So there is a lot of dividend and yield seekers that want these products. It's not just some minor product that's getting $100 million. And we look at MSTR's capital structure, you could see focusing on right over here, out of that 74 billion, 60 billion of it is that Bitcoin surplus. 8 billion is the convertible notes. And then these preferreds right over here, they make up 6.3 billion or 8.5% of that capital structure. And if we take a closer look at those 4 preferred equity products, I won't go through them all, but let's focus on just one of them. Let's take the Strife right over here. These are senior fixed preferreds. So we'll go through some of the details. They're paying a 10% dividend. So Strife, for the people who are interested, notice some of the features about Strife. It's paying a 10% annual cash dividend, right? So that 10% dividend, that's broken up into 4 quarters right over here. Plus it has this enhanced protection. What is that enhanced protection? It means that when MicroStrategy needs to suspend that dividend, there will be a 1% increase in terms of their missed payment up to 18%. So that's the protection that people get when they miss that dividend payment. In terms of when they initially offered this, it was at $85 per share in terms of the preferred share. It yielded almost 12%. And in terms of what it's yielding today, like roughly July, August, it was yielding close to 8.7, so close to 9%. And in terms of investor demand, you could see that it started out at $85, but the price has shot up by almost 30%. We could see right over here, Strife is trading at $112, giving it almost a 30% gain. So if we summarize Strife, it's actually a product for those dividend investors who want safety, right? Because there's safety, seniority, they can have claims before the common shareholders. And then there's also that dividend protection that MicroStrategy can pay up to 18% on. It's better than a bond because you're not just earning that 9 to 11%, but you're actually getting price appreciation. Since their launch, it's now trading at $112. So they've almost made 30% just on that preferred shares alone. So this is what he calls as intelligent leverage, right? The best kind of leverage because the maturity date never comes because it's not like a bond or convertible note where you have that maturity date to deal with that loan. This will never come. You're not at that credit risk, okay? It allows you to leverage a lot higher without that credit risk. So this is where MicroStrategy has kind of graduated to, from starting from their ATMs, their senior loans to convertible bonds. And then now he's looking at preferred shares, preferred equities a lot more for those reasons. So the second part to the answer of what's next for BMNR is also in that convertible note. So just coming over to strategies page, we could see right over here their debt. Look at all these convertible. So these are the issue date when they were issued, right? These are the maturity dates right over here. So you could see if you add them all up, like I said, it's only roughly 5 years. But the interesting thing is notice the coupons. So that's the payment, the interest payment that MicroStrategy MSTR has to make on their convertible notes, their convertible bonds, okay? So right over here, you can see if you add them all up, some of them are actually at 0%. Most of them are at 0%, but the total, the average of them is actually at 0.4%. So Strategy, big companies like Strategy, BMNR, they can borrow money much more effective than you and I can. And we'll look at why, investors are willing to loan them that money in terms of convertible notes. There are positive features that allows them to borrow at such a low rate. 8.2 billion, like what we talked about. And in terms of right over here, the reference price is when they issued that convertible note, okay? So notice right over here, this first one, Convert 2828, if you look right here, they issued it at $130 when, the price of MSTR share we're trading at, and you can convert them at $183. So usually they're like 40-50% up before you get to convert them. Notice this one right over here. Let's take a look at an interesting one, Convert 2030B. So this is a 5-year bond that ends in 2028 right over here. So they issued it at $321 and you get to convert it at $433, okay? So that's a $2 billion loan that they got at 0%. So we just go back to the capital structure. You could see that the convertible notes right over here makes up 8.2 billion. So 11% of this capital structure right over here. So if you add up this 11% plus the preferred equities, that's almost 20% of MicroStrategy's debt and preferred equities. So why should BMNR use these convertible notes, these debt structures, okay? Number one, the most obvious is you don't immediately dilute your common shareholders because it's basically bringing in money. And even if the convertible notes convert later on to become common stock, you're converting at 40-50% higher in terms of stock price. So your common shareholders will continuously be happy, driving up value. Now, to investors, they love this because there's downside protection should things not going according to plan. On the maturity date, they simply get back their loan, but they also have that upside in terms of that protection as well. Now, we talked about this in the past. Who are the people who buy this? It's not normal people like you and I, unless you're trading it without me knowing, but it's actually arbitrage desks, hedge funds, and, major institutions that have mandates in terms of they can only go into bonds. So think about like pension funds and other major institutions like that. Insurance funds where they go in and they buy these bonds. So these arbitrage, trading desks, hedge funds, what they do is they buy these bonds, they short the stock. So they go out, they short the stock and they pocket that volatility premium. But we're not going to get into that today. So what they do is they leverage and amplify your returns because you're getting cheap money. So at a 0%, that's really cheap money for 5 years. He's basically borrowing $10,000 a year and only paying $40 on that $10,000. You can think about what you could do if you were able to borrow $10,000 and only pay $40 a year on that money, right? So as BTC rises much higher, so if you look at the rate of BTC growth, if it rises a lot higher than the interest cost, that 0.4%, you're going to boost returns massively on your common stock, your common equities for your shareholders. Now, for those who don't know, Charlie right over here, he does a really good job at reporting all the different asset classes. If you look at gold, you look at all the different indexes. Notice right over here, Bitcoin for the past sort of since its inception, since 2011, so 14, 15 years, it's going at 139, 140%. Now, of course, these earlier years, you can't factor them in because it was running crazy. But even if you take the last 4 or 5 years, okay, if you look at the returns on Bitcoin for the last couple of years and you look at its annualized growth, it's actually growing at 60%. And Michael Saylor says he expects Bitcoin to be growing at 25, 30% for the next 10, 15 years or even longer, okay? So when he's borrowing money at 0.4% and growing it at 20, 30, or 60%, whatever it is, this is a win-win situation for him. So that's why he uses convertible notes. And I know for a lot of people who are new to these convertible notes, right, these hybrid securities, it's hard to understand. So I'm going to use a real life example right over here. Let's take a look at only one of them in a couple of scenarios, how they play out. So if you look at the convertible 2030B right over here, that's at 0%, you know, they're loaning him $2 billion. Who in the right state of mind would loan $2 billion at only 0% for 5 years, okay? And the conversion value it was at $321 when they issued these convertibles, and you only get to convert them if it's higher than $433. So keep that in mind. Let's take a look at a couple of scenarios and understand and think about them from the bondholders and thinking about them from strategy or BMNR's point of view, see why they would want to use these. So here's the details of that convertible 2030B. It was issued in February this year. We know the terms is 0% for 5 years, that $2 billion notional value that was loaned. So here's the conversion price. So up to here, you can't convert, but at $433, you start to convert that to common shares because you're now making money on that upside. So let's take a look at a couple of scenarios. So here's outcome number one. The stock trades flat, never trades above that $320 line. What that means is that conversion is worthless because you never touched that $433, right? All the bondholders get back is that $1,000. There's zero interest. So the TLDR right here is simply MicroStrategy wins because they've gotten a loan 5 years using $2 billion at 0% interest. Now here's outcome number two. The stock rises, but it only rises modestly to $500. So the conversion is now profitable because that $433 line you convert. So what happens to the bondholder so that you can understand it? Well, they convert that $1,000, so bond are denoted in $1,000 notional value into 2.31 shares. So if you take that 1,000, you divide it by 433, you get that 2.3 shares, okay? You take that 2.3 share, you multiply it by the price of the stock trading, it's worth $1,155. So the difference between here and here is 15.5%. And over 5 years, that's an annualized of 3%. So the bondholders still get a modest rise of that 3% every single year rather than that coupon, right? So small win for them, better than a 0% coupon. They get their money back. But MSTR wins out hugely because the stock has converged. And of course, Bitcoin's price is growing at roughly 20, 25, 30%, whatever that is. And they paid literally only 3%. This debt goes away as well because that bond, that convertible note has now been converted into a common share. So that debt, that $2 billion has been erased from MicroStrategy. That's what he's talking about when he's talking about trying to do intelligent leverage. So option number three, the stock shoots up. It moons to $1,000 because Bitcoin is mooning. The conversion is very profitable now because we converted at $433. So same thing, the bondholder converts at $433. So that's still that 2.31 shares. We multiply it by the price of the stock right now is $1,000. That's where we get the 23.10 from. The difference between here and here, right, is 131% over 5 years. So for bondholders, for the dividend yield seekers, they're growing at 18%. So they're definitely going to convert. Of course, again, that debt goes away in this case. It's a big win for the holders. They're coming in at 18% and obviously a big win for MicroStrategy as the shares have mooned. Now, the last case is when the stock crashes. Well, obviously, when stock crashes, the conversion's worthless. The bondholder simply redeems that principal, that $1,000 that they loaned them. There's no, no upside at all. The protection, this is what's most attractive to them. So the bondholders, in almost every scenario, they don't lose their value, right? They don't lose their money. You don't lose your money, you get your money back. The only negative is for MSTR is that the share prices have crashed. That's what happened during the bear market. But for the convertible notes The bondholders, right, what they do is they actually protect their principal, and that's what they're after. So going forward, I think that BMNR can move towards these two strategies, therefore increasing that NAV per share, that value per share for all of its common shareholders. So if you look at both of them, there's no immediate dilution. So that total outstanding share number is not going to go up. Now for preferred stock, it's yielding a very attractive yield with protection. So that's where the perpetual intelligent leverage comes from. Whereas convertible notes, the bonds, right? It's very cheap leverage because some of them are going at 0% and all of them are at 0.4%. That's great to borrow. Borrowing $10,000 and only paying $40 of interest on it. There's protection for the convertible note holders, the bond holders, but also the equity upside via that conversion. So that's why these two are very attractive instruments. I think they're much better tools than ATMs. So even though Tom has not announced it yet, at some point, I do believe that he's going to move towards the preferreds and convertibles. Why? Because they keep the outstanding shares lower. You get to borrow cheap money, intelligent leverage, therefore increasing value for your shareholders. And back to this equation right over here, you can see that those two instruments is going to affect this total outstanding shares. And that's how that NAV per share is going to increase over time because they're much better tools than ATMs. At some point, ATMs are going to crash the MNAV. People are going to be sick of it. Your shareholders are pissed off. They're not doing well. The stock is not going to do well. So do expect a pivot towards this MSTR strategy. Finally, let's talk about the ETH fundamentals and what's happening in the market right now. Why I'm so bullish on ETH? Because I always get this question. Nothing is happening on ETH. Nobody is building on ETH. Well, if you just look at the market right now, going all the way back to 2020 in terms of the ETH versus BTC in spot market, in terms of trading on the spot market, you can see total volume in terms of USD here. The orange is all BTC, of course, and ETH is blue. Back in 2020, you could see that it's being dominated by orange, but for the first time, September of this year, you could see the blue overtaking the orange, okay? So ETH actually overtaken BTC in terms of spot market. So you can see there's a lot more action on ETH. The second thing is the stable coin supply. We talked about this. This is one of the major shifts, that 1971 moment that Tom is referring to. You can see the stable coin market has grown largely from 2016, 2017. It's now at $172 billion. In 2016, there was less than $200 million. In 2017, there was only $1.3 billion. It was mostly USDT Tether. Now you can see there's USDC. There's other players who are entering the market. So continue to see that stablecoin growth. So back from 2016 to now, stablecoins itself has grown by 1200x. And of course, there's a lot of talks about stablecoins and buying up treasury, the T-bills. Going forward, the US government is pushing it. So I see this administration pushing that boundary for stablecoins. And yes, nobody is building on ETH, but the only problem with that is there's actually a lot of people building on ETH. If you look right over here, Fidelity recently launched their tokenized US treasuries on Ethereum. And if you don't know who Fidelity is, they're one of the largest asset managers. They have 16 trillion under their asset management. They have a lot of clients. Even back in 2020, you could see there's already 31 million clients. And notice right over here, Sean Adam reports on this. He says that Fidelity has launched their money markets on Ethereum already at 200 million. You know, they have $1.4 trillion in their money market assets, okay? So that's just the money market side. So you could see a lot. And if anybody tells you that nobody's building on ETH, you can show them this slide right over here. You could see from banks, the payment processors, you know, to asset managers, the car companies, you know, streaming services. There's a lot of people, you know, e-commerce that's building on Ethereum. So that's really, you know, when people say that nobody's building on Ethereum, there's nothing happening on Ethereum. You could see that not only Wall Street are moving onto Ethereum, you have the digital asset treasury companies that are buying. There's a lot of things happening. So recently in Korea, right over here, you know, Upbit, which is the largest exchange in Korea, has now started to build on the layer 2 on Ethereum. So you could also see right over here, NASDAQ is pushing towards launching their tokenized security on Ethereum. So there's a lot of people on Ethereum. And recently the SEC and CFTC came together and basically they're opening the floodgates in this joint statement, allowing for these exchanges, these major exchanges like the NASDAQ, New York Stock Exchange, the Chicago Board of Options Exchange, CME, all of these exchanges to be able to file going forward to be able to launch trading of spot Bitcoin, Ethereum. It hasn't happened yet, but they're opening up the floodgates for that. And then when you see things like this, OG Bitcoin whales rotating over $4 billion and these transactions are trackable, over the blockchain, you could see that they're pouring a lot of money. They're rotating their money from Bitcoin into Ethereum. You know that things are starting to move within the economy. And looking at the macro events, we're now at 100% that coming to September 17th, the Feds will cut the rate, okay? So 25 basis points, we're now at 90%, and they're starting to talk about 50 basis points. And the reason for that is because if you look at the job revision in terms of the job growth, it's actually down 911,000 in terms of their last revision. If you price that out monthly, we're losing about 76,000. It's actually a negative 76,000 jobs per month. And I posted this onto my Twitter right over here. I said that 50 basis points incoming. What happens when we rate cut? Of course, we infuse money into the economy, right? When you infuse money into the economy, you start the printing press. Risk assets like stocks and crypto, especially Bitcoin and Ethereum, starts to ride up. So I do expect it to look a lot better in Q4. And then if we look at the PPI data right over here, it came in softer, which leads to a dovish Fed, right? So eventually Jerome Powell has to step in and cut rates. We're on track for 2, maybe a possible 3 rate cuts by the end of this year. And lastly, I just wanted to quickly mention Cathie Woods and ARK Invest. They recently bought more BMNR shares. And if you look as of the 9th of 9th, so September 9th right over here, they added their biggest position, 690,000 BMNR shares. So that was their biggest position add in the last several months, bringing their position to roughly 320, 330 million. Now, some people may say, and they don't agree with Cathie, that's fine. You have your own opinion. You know, some of her investments are off, but I'd rather these investors continue to support the shares. I don't want to hear about them shorting the shares or shorting the stock, which actually creates a worse price movement for us. So it's great to see these people on. And even if you don't agree with Cathie, you got to agree with this guy. So recently, you know, the Hong Kong-based company Yufeng Financials, which is affiliated with Jack Ma, you know, the owner of Alibaba, they've actually purchased 10,000 ETH. So that's a $44 million buy into ETH. So it goes to show you, it adds confidence into the ETH market that a lot of people are purchasing ETH outside of the digital asset treasury companies that we're seeing. So I'm just going to close off with this, my price target. So I continue to remain committed to BMNR. As you know, I'm a big holder of BMNR, and I'm also a big bull of Bitmine as well. I do think that the share price should hit 100 by the end of the year, okay, as ETH continues to charge up. And we talked about all the fundamentals, all the different strategies of how that NAV per share is going to go up. And at the same time, there's a lot of stuff happening on ETH right now. So that wraps it up for today. I hope that you guys found this video helpful. You found something educational, and I'll continue to make videos like this. So give me some suggestions, feedback on what I should cover next, and I will see you guys next time.